when you have a vision, you have a plan for your future, it's best to obviously write it down. Write it down so that way it's codified and you know this is what you're aiming for. Something strange happens. There's a metamorphosis that occurs when you start making consistent money. Everything goes out the window. It's like casino time. You lose all aspirations for being structured about everything you're doing. You're just saying, well, let's just see what happens if I do this many contracts and I try to hold for this much. Something's changed, not for the better. So over years of looking back and looking at journal entries and the times where I struggled and the times where I had epiphanies where it felt like I was really gaining in my understanding, it was when I was referring back to having structure in the way I was trading. Not in the sense that optimal trade entries or order blocks in their infancy, none of those types of things. I'm talking about the structure of what it is I'm doing as a trader. What's the motivation? What's my goal? They have to be specific, because if you don't have specific goals, you won't know when you're going outside the lines and boundaries of what would lead to realistic results getting to that objective. Would it be reasonable for me to expect a net gain in 1992 of $250? I know some of you are laughing, thinking, $250? This guy's showing $7,000, $10,000 days. Humble beginnings, folks. That's where you're at right now. Don't be afraid of that. Don't be ashamed of it. Everyone starts there. But most people fail right there. They don't ever come out of that. And I can tell you the blueprint to get out of that stuff and get to the next level and hopefully get to where I am now. You'll do things I'm going to talk about in this series and in this woodshed moment, where I'm taking you to the woodshed and correcting your perspective on how you should be thinking you're going to make this money. Okay? You have to have a very, very low-hanging fruit objective and then increase that gradually. Very, very small, very, very small, slow, incremental, modular gains. That's how you do it. If you jump and you think, okay, I have a low-hanging fruit objective. I hit it. I've been hitting consistently. All right, now I'm just going to go, I want $10,000 a month. You're going to fail. Because you didn't make that transition from $250 a week to $500 a week to $750 a week to $1,000 a week to $1,500 a week. That's a gradual increase. You get acclimated to the risks, the feeling of putting on that type of trade as it grows exponentially. You don't even know what that feels like. You have no idea what that feels like. And the wins are scary as hell. They're so scary. Yes, I said it right. The wins, not the losses. The losses haven't really stopped you from trading. As long as you had money in your account, you kept taking trades. So that's not a fear factor for you. You're smiling again. That wasn't a deterrent for you to stop trading. As long as you had money in there. Oh, I lost. Okay, well, I'm pissed off now. I'm going to go in there for more. And they're going to pay me with interest. Oh, yeah. And the interest was paid that you paid it. Now you're in greater drawdown or you're blowing your account, like I did dozens of times over my career. There's no shame in that. You have to learn from those things. But you are going to be doing things at a slower pace. That's how you make ends meet. So I know I've given you a 50 caliber Barrett, and you don't even realize it yet. But if you understand where you're going with it, what are you going to do with it? You'll see how easy it is to build wealth. Wealth doesn't happen right away. Now, your goal should be to work towards being rich. Rich is not wealthy. Wealthy is where the money's making money for you. Rich is where you don't need to work to make your bills. So you might be laughing and thinking, man, I can't, $1,000 ain't going to do nothing for me. Oh, really? Really? Okay, let's say you have a $2,500 a month mortgage. And that's pretty reasonable considering most houses are around $350,000. That's like the median price right now in the U.S. with maybe utilities and your mortgage, $2,500 is about there. What happens if you have $1,000 every month that goes towards that? How much of an ease on your stress and nerves would that bring you? I can tell you that would be a very big weight, and you're not getting everything covered, but you're doing the right thing. That's making ends meet. And then doing that month after month, slowly growing it more, so then you're trying to make $1,250 a month, and then $1,500 a month, $1,750, $2,000 a month. What that does, it allows you to grow with a principle-oriented approach that you have to make this work with a sober, low-hanging fruit objective and target. You're not out there just throwing the dice and say, okay, let's see what I can get. What's the best that can happen in this situation? That's a laboratory experiment that's guaranteed to blow up in your face. Versus, I don't need to do very much to make $250 a week. Even in Forex, as stagnant as those pairs are right now, you can still eke out $250 a week. It's not a big deal. It's easy. If you're trading micros in the S&P and NASDAQ, the futures market, not the $50 per point for ES, but the $5 per point, or not point, per point. That would still be possible to get that $250. You're going to work, but you can get it. But you want to have a approach that allows you to do the very least and let the compounding over time and the new equity increases, let that do the heavy lifting. That's what I did. That's the real secret to it all. Doing something very small, cookie cutter approach. When I was on baby pips, okay, what did I preach? If you were with me back then, 2010, what was I teaching? Find one good setup, 25 pips a week. Now, you can get 5 pips a day. If you're ultra new and you're scared to get into a trade and hold it to the completion, is there something wrong with going into a trade and getting out after 5 pips? No, not if you're new, because you're going to be scared. You're going to be terrified it's going to turn against you, and it might turn against you. But if it moves 5 pips in your favor and you're brand new and you cover and you get out, you gave yourself that cookie. And then you say, okay, I'm aiming for 25 pips, but I got out this entire week, every single day, and I got out with 5 pips of movement. It went to my target, or it came back and stopped me out. Who cares? But 5 pips it gave me, and I got it when it offered it to me. I closed it. I did it every day, so now I got my 25 pips. Is there anything wrong with that? No. Not if you're a brand new trader? Nope, absolutely not. And then the next week you go in and say, okay, I'm going to try to hold on and see if I can get to that 8 pips or 10 pips of the 25 I'm getting. And then when you get it, even though it looks like it's going in your favor to your target, you close it at 10. Just do that. What you're doing is you're giving yourself experience. Not, this is the number of pips and points I can get in the marketplace consistently, and I'm going to use money management and do all the heavy lifting. I didn't know what I was doing. And I'm a math guy, science guy, and I got lost in the money. That's what happens, folks. It's exactly what happens. And I know some of you are going to think to yourselves, well, I'm not going to be a victim to that. ICT was a fool. No, we all get bit by that bug. Greed, man, it's a venom that you just don't understand until you feel it. And the problem is, you don't even know you're under its influence until it's too late. Ruin. Then you're like, oh, if I just would have realized at that moment. And yeah, every time I blew my account, I know the exact moment I should have not done the very thing. But yet I still did it. Because I had no structure. I had no way of determining what it was that I was aiming for. And it's not just a dollar amount. What are you striving for? What is it you're aiming for your trading? What's the goal? What's the reasons why you're doing all this stuff? If it's just to make money, okay, how much? How are you gonna earn that much money? What is it you're trying to do? If you looked at trying to make 1% a day, you'll find out that 1% is pretty easy. And what happens is you get greedy because you know you can get that 1%, and it doesn't take a lot of effort to get it. Now, to make 1% one time a week, that is amazing results, folks. Okay, so before I go any further, just know that if that's all you do, you're killing it. What's the lowest funded account? Go that route. Trade with that. Build that up. Because if you can't build that $10,000 or $20,000 leverage funded account up to a $500,000 account in 2 years, guess what? You sure as fuck wouldn't have done anything with that $500,000 account. You're not prepared for it. You have no idea what it feels like to be in those types of trades. That's why you see everybody, they put their little certificate up, said, I got funded. And then 2 weeks later, I blew it. I'm not talking down to you. I'm talking to you. Eye to eye. You're doing what I'm telling you what not to do. And so many of you are in line to do the same bullshit and hurt yourself and prolong this whole process. What's the lowest hanging fruit objective? Do that. And as the money grows, more money will be allocated to each trade. The percentage of risk is not increasing. That stays constant. And as the equity grows, the results will grow comparably. And you don't get sucked into this, I have to do it right now. I got to have it all right now. No, you don't, because you're not prepared for it. Mentally, psychologically, you can't handle it. You can't. You cannot handle that type of success. When a winning trade like that gets put on, you're not going to be able to sleep. You'll be out of the trade. I'm telling you, like no doze. As soon as you start trading with live funds, you're going to see how hard it is to hold on to a winning trade. But it's easy to hold on to a losing trade. Why is that? You don't want to submit to a loss. But you really want to get out of that winning trade because you think it's the only one that's ever going to happen to you. This is where the rubber meets the road. I already taught you how to trade. Now I'm telling you how to survive. Because having that 50 caliber Barrett, you could still hurt yourself. There's a whole lot of people out there that buy all the next best things and gadgets and things, and they still are useless because they haven't properly been trained. Your intelligence as a trader, just because you now know this model and you know what it looks like and how to find them, your intelligence as a trader is infantile right now. You're still an infant. You're a baby. And that's not a knock against you. You have to be aware of that. And you have to take baby steps. And then you start moving towards where you're walking a little bit more efficiently without anybody holding your hand. And then eventually you'll get stronger and more coordinated, and then you can run. And then you become an adult. And you have all that adult muscle and capability and stability and agility, all those things that lead towards you are able to do things that a small child can't. And right now, as a small infant in your understanding about the markets and your personal experience, you can't grasp the importance or the weight of the things I'm talking about right now because you haven't endured it yet. But once you do, these types of lessons mean much more. Think about this. All these businesses that are brick and mortar, okay, like a storefront, you go in there and you buy your shoes, buy your clothes. How do they know when sales are going to come in? They have sales reports and trends where certain times of the day, on certain days of the week, this is where we have a rush of customers usually. But there's no real guarantee that that's going to happen. You don't know if there's going to be customers coming into your business. In this business I've laid out for you, I give you a business plan. Every single day, you're looking at the market between 8:30 and 11. That's your storefront hours. There's your business hours, okay? It's not a full day. and you're looking for something to happen. You're waiting for a customer to come through the door. That means you're watching to see when liquidity is getting taken. Okay, they took something off the rack, they're interested. Okay, you're standing at the register, make sure that sale's done. But they might change their mind. The market might run off, and they may put it back on the rack and leave. It's the same thing with this business. But you have to be there. You have to be in front of the market, waiting for that opportunity. You have to have the store open, or you're not going to make the sale. Every other business out there, they have all this overhead, all these costs, all these requirements for employees. You're the boss, you're the employee, you have operating hours. It's very easy, 8:30 to 11, boom, done. If a customer doesn't walk through the door, that means the setup doesn't come in, guess what? You didn't have to work hard for that day. You just had to be there. You had to have the doors open, the lights on. And that's sometimes what trading's like. Just because your ass sits down in front of your computer doesn't mean you're getting a trade. The market doesn't owe you that. This is bullshit, man. I've been sitting here. It better give me an FVG. It better give me a fair value. It better. Somebody's ass is in a sling if it don't give me an FVG. It's funny reading some of you guys. Your expectations and entitlements ridiculous. It's funny, entertaining as shit, but it's unrealistic. It's crazy. But that's what trading's like sometimes. You could be ready to do it, and I'm not ready to do it. And you got to be okay with that. And no, guess what? Your model ain't broken. Your threshold, your 5 handles, is not too much. It's going to give it to you, just not that day or that session. Don't want to trade in the morning? You think it's too much volatility and uncertainty? Okay, no problem. Wait until after lunch. Use the PM session stuff I've given you. There's a lot of times the last 90 minutes of trading, that's the easy stuff. Because you can see what it's done in the morning, all that uncertainty, the bias is still in play, and the higher time frame daily chart is going to lead you to what? Where is it drawing to? And usually the last 90 minutes to 60 minutes, the algorithms really kick in, market on close orders start piling in, and boom, you get this real nice, easy, predictable market environment where liquidity is ran to. That could be your model. That could be your 5 handles if you're index trading.